Hi students, welcome to Sunil's tutorial. I'm Sunil Nirvani and today we'll be doing this chapter called as amalgamation. We're going to do question number 17 today in the books of Premier Limited and Modern Auto. Right? There's a that illustration 17. Right? They said that Premier Limited agreed to acquire Modern Auto on 31st March. Premier Limited buys Modern Auto on 31st March 2004. The balance sheet of Modern Auto as on the date is given as follows. The consideration payable by Premier Limited was agreed as follows. Cash payment equal to 2 rupees 50 paisa per share in Modern Auto. Let's do calculation of PC. Calculation of PC. Cash. They are going to pay you 2 rupees 50 paisa per share. 2 rupees 50 paisa per share. How many shares are there in Modern Auto? There are 6,000 shares in Modern Auto. So 2 rupees 50 paisa equals 6,000. How much is that? 15,000. So you are going to get cash 15,000. Issue 9,000 equity shares of rupees 10 each of Premier Limited, having an agreed value of 15 per share. 9,000 equity shares of Premier Limited at the rate of 15. Suppose we do 9,000 into 15, 135, 1,35,000. So my total PC is going to be 1,50,000. Right? Okay, once I have PC, let's start. First, we'll make journal entries in the books of Modern Auto. How do I make journal entries in the books of Modern Auto? First, you transfer all the assets. So realization account debit 2. Look at your balance sheet. Look at the asset side of your balance sheet. Goodwill account 2. Building 2. Machinery 2. Stock 2. Book debts 2. UTI bank. Right? Goodwill is 10,000. Building is 30,000. Machinery is 34,000. Stock is 16,800. Book debts is 3,600 and UTI bank is 5,000. The addition of that is 1 lakh.
So 5,600.
Which one? UTI bank is 5,600. So addition of that is 1 lakh. Being assets transferred. Right? Now transfer the liabilities. Now amongst liabilities you have, if you want to transfer the liabilities, amongst liabilities you have is 6% debentures, 6% debentures debit. Then you have sundry creditors debit. 2. Realization. Right? Debentures are 10,000. Creditors are 2,000. Total is 12,000. Being liabilities transferred. Right? Next, you have to transfer preference shares. There are no preference shares, so you will transfer equity shares. So this will be equity share capital account debit, general reserve account debit, profit and loss account debit to equity shareholders. Equity share capital is 60,000. Then you have general reserve 17,000. PNL is 11,000. 60, 70, 80, 88,000. Right? Being equity shares transferred. This is being equity shares transferred. Right? Once you transfer the equity shares, then record the PC. The new company is Premier Limited. Premier Limited account debit to realization. Amount is going to be PC 1,50,000. $1,50,000 being PC recorded. Once you have recorded the PC, then you need to receive the PC. What all are they going to pay you? They have promised to pay you cash, debit what comes in, cash account debit, equity shares of Premier Limited debit to Premier Limited. Cash account is 15,000. Premier Limited is 1,35,000. That's equity shares of Premier Limited, and total is 1,50,000. Being PC received. Once you receive the PC, the next thing is you have to pay the preference shareholders. There are no preference shares. Next, calculate the profit or loss. Realization on the debit side 1 lakh. Guys, someone please do the calculation. On the credit side 12,000. Then you have on the credit side 1,50,000 again, right? That's it. Someone please tell me, and is there any expenses or anything given in the sum? The cost of liquidation of Modern Auto is rupees 500. The last line. Cost of liquidation is given to you. Cost of liquidation I have to pay. Money is going out. So this is going to be realization account debit to bank. Cost of liquidation is 500. The realization expenses paid. Right? Yeah. Now do the calculation on the debit side 1 lakh, credit side 12,000, credit side 1,50,000, and debit side 500. Difference is 61,500. Yeah. Right? Now this is going to be in that case realization account debit. Realization account debit to equity shareholder. Amount is 61,500. 61,500 being profit transfer to equity shareholders. Right? Now, once you finish transferring the profit, next you have to pay the equity shareholder. So if I pay the equity shareholders, what am I going to pay them? I'm going to pay them everything that I had received. I had received cash, so you have to pay debit the receiver. Equity shareholders account debit. You're going to pay them cash, and you're going to pay them equity shares of Premier Limited. Right? So in that case, you're going to have cash is 15,000, Equity shares of Premier Limited 1,35,000. Total is 1,50,000. This is what you want to pay them. Find the thing here. Being out of the cash, 500 you have spent on paying the realization expenses. So the net cash that is going to remain in your hand is 14,500. You will receive 15,000 cash from them. Out of that 500 you have used to pay realization expenses. So the cash remaining with your hand in your hand is 14,500. So the net amount that the equity shareholders will get is 1,49,500, being equity shareholders paid. Right? So we finished in the books of Modern Auto. Now let's see in the books of Premier Limited. Right? First thing, you have to take over the business. So this is going to be business purchase account debit. To liquidators of Modern Auto. This is going to be business purchase to liquidators 1,50,000. That's your PC amount. Being business acquired. Once you acquire the business, the next thing that you have to do is take over assets and liabilities. Right? Have they given you any new value of assets and liabilities? While computing the PC of Premier Limited, value building and machinery at 60, stock at 14, and book debts at this much. Okay, they've given you new values. So just let's write this down first. Building. Question. So why aren't you writing goodwill first? Goodwill is written as your tanning figure. So if there is a goodwill, don't write goodwill first. Start with the other assets. Right? Building account, machinery account, stock account, book debts, and then you have UTI bank. Leave a line to the liabilities that you are taking. 6% debentures of Modern Auto to creditors to business purchase. Right? Now let's see this. They are saying that building and machinery is to be taken over at 60,000 each. Building and machinery to be taken over at 60,000 each. Stock at 14,200. Right? Book debts at 5% discount. Now my book debts were 3,600. Someone please calculate 5% discount on that. 180. So 3,500, 3,420. Right? UTI bank as it is 5,600. Now they've also said that see the adjustment C, issue of such amount of fully paid 8% debentures of Premier Limited at 96 each as is sufficient to discharge 6% debentures of Modern Auto at 20% premium. Debentures of Modern Auto were of 10,000. If I have to pay them at 20% premium, that means on 10,000, 20% premium will be 2,000. That means the net amount that I have to pay them would be 12,000 in that case. Instead of 10,000, I will have to pay them 12,000. Creditors, they haven't said anything. Business purchase 1,50,000 as it is. Now check the difference. If the difference comes on the debit side, it is called as goodwill. If it comes on the credit side, it is called as capital reserve. Someone please check and tell me how much is this. I presume that the difference is on the debit side. Someone check and tell me. Goodwill account.
Credit side.
Credit side is bigger. 150, 162, 164. That's 120, 134, and then another 8,000. So the difference
2780.
20,780. 20,780. Right? Mean assets and liabilities taken over. Once you have taken over assets and liabilities, the next thing that you have to do is pay the PC. Right? How do I pay the PC? Right? Debitor, receiver, liquidators of Modern Auto debit. 2. What all are you going to pay them? You're going to pay them equity share capital to security premium to cash. Right? So let's see this. Liquidators of Modern Auto is 1,50,000. Right? Equity share capital. Now we had issued 9,000 shares at 15 rupees each. If you see your calculation of PC, we had issued 9,000 shares at 15 rupees each. The actual value of each share was 10 rupees. So 9,000 into 10, 90,000. Right? Then 9,000 into 5, 45,000. That's going to be my premium. And cash is 15,000. Being PC paid. Next, let's come to the exchange of debentures. Now, they are saying that to issue such amount of fully paid 8% debentures at 96, face value working note, face value issue price. A 100 rupee debenture you want to issue at 96. In order to pay the debenture holders of Modern Auto, you require 12,000 rupees worth debenture. That means you would have to issue debentures of what value? 12,000 into 100 divided by 96, which would be 12,500. That means I have to issue these debentures. I'll have to take in the old debentures of Modern Auto. Debit what comes in? 6% debentures of Modern Auto. Debit, leave a line. You are issuing new 8% debentures. Right? 6% debentures of Modern Auto by 12,000. You are issuing debentures of 12,500. The difference is going to be discount on issue of debentures. Discount on issue of debentures. Right? 500. Being debentures exchanged. Right? Anything else is done? No. That's it. Now we need to make balance sheet. We need to make balance sheet in the books of Premier Limited. This should be very simple. Balance sheet. Liabilities, rupees, assets, rupees, authorized share capital. Authorized share capital. Have they given you the authorized share capital? No. They haven't given you the authorized share capital. Okay. Issued and subscribed capital. Issued and subscribed capital. Now, in that, you will first of all have equity share capital. Equity share capital is going to be 90,000. Right? That's it. Then you have reserves and surplus. Reserves and surplus will have security premium. Security premium you found out is 45,000. Right? Next, you have secured loans. Under secured loans, the new debentures that you issued, 8% debentures of 12,500. Unsecured loans, not there. Current liabilities. Under current liabilities, you have creditors, 2,000. Right? That's it. Is there anything else?
No.
Fixed assets. Fixed assets, you have building. Building is 60,000. Machinery is 60,000. Goodwill is 20,780. That's it. Investments nil. Current assets, under current assets you have stock 14,200. Book debts 3,420. UTI bank. Now we have problems. UTI bank is 5,600 and we have paid cash 15,000. So you are going to be in bank overdraft. You have got 5,600 whereas you have paid 15,000. So there is going to be UTI bank will be nil, and on the liability side you will have bank OD, which is going to be 15,000 minus 5,600. Someone please tell me. 9,400. So your bank OD is going to be 9,400. Then discount on issue of debentures. Discount on issue of debentures. Discount on issue of debentures is 500. Someone check if the balance sheet tallies.
158900.
158900. 158900. That finishes that sum. We'll stop this here for the day. Thank you very much.